The Dental Brief is brought to you by Omni Premier Marketing and the amazing guests who bring wisdom and advice that you can put to use to take your business and practices to the next level. Find us on Facebook and join the conversation. Get ready to grow because we are kicking off the next episode in 3, 2, 1.
Hello, everyone. Welcome to another episode of the Dental Brief. Today, I've got a terrific guest. He works with dentists all over the planet. He's down in Florida right now, and where he's enjoying a much warmer temperature than we have here in Colorado. I think this is the second or maybe the third time on the show. Always bringing some great information and content. Malik, say hello to everyone.
Hello, everybody.
One of the times, it was either the last time or the first time you were on the program, you said something to me that I've repeated a million times, is that over the course of a career, the average dentist will pay more than $1 million in taxes that they're not obligated to pay. They don't have to pay, which is insane to me when you think about that. I mean, we're talking about retiring multiple years early if you're investing that tax savings into, or that money into, the right type of investment accounts. It's amazing what that can do for one's retirement. So maybe we'll touch on that a little bit. But Jay, tell us a little bit about kind of what you do and who you help.
Well, I own a dental accounting firm here in South Florida, and we serve dentists all over the country. We are exclusively dental firm, and we start by creating a plan to lower the tax burden of the dentist. And then we do full service accounting like anybody else, payroll, bookkeeping, tax return filing, everything. But the focus is to lower the tax burden and do it legally and set up the accounting system and everything to meet that need.
So tell me, this is something that I know we've talked about before, but I think it's important. And by the way, we're right in the heart of tax season, right? So right about now is the time that most CPAs, most tax prep people are incredibly busy. Is right now the time that you should be prepping for your 2023 tax returns here in early 2024? Or should this have happened years before or last year?
It's never too late to pay attention to it. What I have noticed over my decades of working with the dentists, right now the pain they have is the maximum because they're paying and they're seeing that, how much they're paying. If they act, this is the best time to act, because if they don't, if they put it away, I'm going to do it later in the summer when it is slow or whatnot, it never gets done. So it's by the way, the process is very simple. And I propagate it right and left, that the best thing a dentist can do to lower the tax burden is to show their tax return to somebody else who has not prepared it. Get a second opinion on your tax return. Yeah. That is all. And what that does is that the second set of eyes then normally, more often than not, will find something which has been overlooked for whatever reason. And then the doctor can decide if they want to use that strategy or that technique or not. But at least they know. And there are a lot of people in the dental accounting field who will give you a second opinion. Some charge for it, some don't. I am on the side, we don't charge anything for it. Anybody can send their tax return in. I'll give them 2 hours of my time, 1 hour each in each meeting, and show them where it shows they have an issue.
Sure.
Not only in the tax overpayment, but also where their KPIs are not aligning, what the KPIs are for the best running practices in the country.
Right. So I know that I've seen this mindset, and I think this, long time ago, I kind of had this mindset too, that if you're not quite hitting the numbers that you think you're going to hit, right? So you're just getting your practice going. Maybe your practice that's doing $300,000, $400,000, $500,000, $700,000 in revenue, and you're thinking, hey, I don't really need to worry about tax savings and tax experts until I'm doing 2 million or 3 million or 1.5 or whatever it is. That's a myth, isn't it?
It is, because over my career, I've seen that 95% of the tax returns dentists send me, there is some opportunity to save money on taxes legally. Sure. So 95% are overpaying in tax. It's a scary number, but that's 95%. What it is. And so I'll give you an example by number so that makes sense probably. A middle of the road dental practice in the US these days collects something between 900,000 to 1.1, 1.2, 1.3 million dollars, right? Somewhere in that range. If you are there, you mean you're kind of median practice in the US, in most parts of the country. And it is not rare to see a practice like that, the doctor paying about $30,000 more in tax every year than they have to pay. Okay. Now, I'll just quantify it in a minute, a little bit more for you. $30,000 roughly of overpaying tax over an average dental career of 35 years. If they had taken that $35,000 rather than paying it in tax, they would have put in a very conservative investment, say 5% growth rate over that 35-year period. At the end of that period, they would have $2 million in their account.
That's crazy. And just to break that down real quickly, so you're talking about taking your tax savings and then applying the rule of seven to it. If people don't know what that term is, it's that your money that you invest will double every 7 years on average, right? That's the rule of seven. Have you heard that term
Yeah,
before?
even don't go there. Just that's simple, 5%, very simple, but simple
5%.
5% growth, right? So
Yeah.
5% compounded growth in an account. You see that's $2 million. And you would be surprised how many dentists talk to me. They are in their 60s, late 50s, somewhere there. And they say, Jay, I can't retire. Okay? And when I look at their tax returns, they have been overpaying forever in their tax obligations.
Right.
If they had just saved that money, they would have $2 million more by
Right.
the end of 35-year career.
Let me put you on the spot with this. If you're 55 years old and you have $2 million, right? So you have $2 million in liquid cash, right? Or you have $2 million invested, something that you can get your hands on, not something like real estate. How soon does it take to double $2 million? So if you have $2 million at the age of 55, when will you have $4 or $5 million? When will that money double?
Well, it depends on the rate of return. And rate of return is actually notoriously difficult to predict.
Sure. On
Because if
average.
you get a certain rate, they don't give you much. As you know, what is the most certain rate of return paid by? Well, that is the most sure investment is the treasury bills, treasury bonds.
Sure.
The federal government gives it, and you might have noticed in the media reports the last couple of weeks, well, in the last couple of months or so, where it was like hitting 5%, the 10-year rate, and
Right.
everybody's saying it's too high. It was high, because of the inflation being low in the country, it never gets that. But
Right.
I'll tell you another easier way to look at that for an average dentist. If somebody wants to estimate how much money they want or they need in retirement, there is a very simple rule of thumb. It has been proven again and again through a lot of back testing and research. If from your retirement portfolio, say in your case $2 million, if you take 4% off every year for the next 25 years, you will not run out of money according to the history. In history of the stock market, more than
Right.
100 years of data is not available. There has never been a period where somebody over 25 years, they have taken 4% and they have run out of money in their lifetime.
Yeah. Wow. That's significant. And we know that percentages, 95% of people are overpaying on their taxes. We also know that you will do a review of past tax years, right? Or will you look at a year back and look at those returns?
The last year, whatever last year they have filed, they
Great.
send it in, I look at that. Well, actually, the way I do is that if somebody becomes a client, then actually I look at the whole. You know that according to the law, you can only amend your past 3 years of tax returns.
Did not
They
know
don't
that.
let you go beyond that. Even if you have overpaid, then that is gone. They don't let you. Only 3 years. But if the government owes you, you owe money to the government will come and get it from you anytime they want.
Right. Yeah, that's true. So let me ask you a couple of questions. Or actually, let me ask you this one question. We're getting kind of tight on time. What's the number one mistake that you see dentists make when it comes to taxes? Even if they're working with an accountant or they're working with some type of a tax agency, what's the number one mistake that you see over and over and over again?
Not getting their tax return checked by somebody else
Yeah,
who's not prepared. That is a number, because every time you do that, you are more likely than not to find some overpayments.
Right. Yeah. Does that mean that if you have, if you overpaid by, let's say $500, does that make sense to amend a return for that? What's the amount of money that you need to,
No,
that you
but
start thinking?
then you make a decision. You see, if you make, I'm sorry to interrupt you. Go ahead.
You're good. No, you're good.
Yeah. So you see, the thing is that 500 is not worth it, right?
Right.
5,000 might be. To somebody else, 3,000 might not be, 4,000 might be. I don't know, right?
Right.
But at least you know where you stand.
Right.
And then you can make an informed decision. The key is not to be swayed by somebody else's views or my views or your views or anybody else's. The key is to make your own decision with information in your hand.
Yep. So, obviously staying within the limits of the law is something that you preach and something that has to be done, that everyone should do. What's a law that you see dentists break a lot, right? That they don't know? What's something that they're doing that they're trying to write off, that they're trying to take advantage of, that they actually can't and are unable to do? Is there anything like that that you see commonly?
Actually, in dentist's case, it is the other way around. They're too scared to even take the legitimate deductions which they are entitled.
Right. Yeah.
Yeah. We our industry is the other way around. It's interesting.
Yeah.
We are really much less aggressive.
Yep.
And
so you've got probably one of the best website URLs for what you do. It's lesstaxfordentist.com. I want to encourage everyone to go check that out. Remember that you'll do a free evaluation for them, 2 hours of time. That's an amazing value. We appreciate that. I'm sure our listeners appreciate that. Mr. Malik, want to have you come back on. Let's get you booked here soon.
Thank you very much. It was wonderful talking to you again.